All right, ladies and gentlemen, I got your watch list coming in December 10th, 2019, and this could change the stock market forever. It is what is going to happen this week. I want to talk about it. I have a theory with the Fed, was going over some stuff and kind of just how I'm viewing this into the end of the year. I've been saying it's an exciting week. We saw an interesting day today and this back and forth, even with the trade war news following the Fed. So I want to talk about that and kind of what to look for and some of the implications moving forward, how it relates to our potential play there with Bank of America that we're setting up. The Fed is starting tomorrow, and then we're going to hear from Jerome Powell on Wednesday and get the press conference and all that. So that's going to be what we're going to be looking out for. I'm going to cover that for you guys. Got some quick keys to look out for and kind of really quickly recapping what is happening this week with the Fed and what's kind of important to take away from there. And then I got the potential plays. So I got 3 different plays I'm looking at. Again, all the companies I'm watching in general, there's more than 3, but I have 3 specific distinct plays. 4 if you consider the bonus, but 3 of them, not including the bonus, are regarding selling premium. And again, this is kind of taking advantage here, and it makes sense in line with this meeting and what we're having here. It is a Fed meeting. It's towards the end of the year. Everybody is kind of expecting what they think is going to happen, so we might not get too much of a move or some slow moves, but then this is even kind of what sparks my other thesis with this. So we'll talk about that, but you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it's pinned in the comments. Hopefully we see you there in the morning. All we ask is that you're positive, respectful. You get to see all these trades. I didn't make any trades today. Usually I would recap those, but we're kind of just holding some plays. So hopefully, again, we see you on there. Just be positive, respectful, post your plays, contribute. That's all. It's a cool, baby. And then the most important thing you need to do, post your watch list below. Let us know what you're looking at. If you got any plays, ideas, anything you're already in, let's source that information. Again, like I said, let me know what your thoughts are coming in on this Fed. But yeah, let's get into it. Before I get to the keys, I will just tell you what is going on here with this Fed meeting and what to really look for. This is what I mean is what could change the market here forever, because I was kind of looking at the last Fed meetings. Again, here, the market is pricing in no change, and I guess it kind of relates to the keys, but the main key for this Fed meeting that is occurring, or the decision we get on Wednesday, it's going to be the future guidance coming out of the Fed and what they're expecting coming into this new year. So what gets said about the interest on excess reserves, how that relates to the repo market. Again, there's a lot of things that is going to be happening during the Fed, but really what I'm saying that could really change here is that there's all these other factors besides interest rates, and essentially this could guide and make a huge impact for how bonds are going to trade in 2020. So whatever they do here, so if they make a big change on interest on excess reserves, if they change anything with like this mandatory bond buying program or kind of what the Fed was doing on the long end, it's kind of showing a huge policy shift in the Fed. And this is what I think has been causing the repo markets when I'm putting all this together. And when I'm looking at this is that essentially whatever we get from here and kind of the stance they take beyond those interest rates, the next big thing that's going to start flashing and showing us what's going on is bonds. And we talked about that kind of today, even on the 11 at 11 when I was going over TLT. It's just something's interesting here with the bond market. The best part about my thesis here, I will quickly be proven right or wrong coming into March really of next year by the end of the first quarter. So that's what I'm excited to see, because if something changes here, there's a big perception change or policy shift, this is going to have big implications here in the both in the short-term future and in the long-term future with bonds. And now even to put this into a digestible format, even for what's happening this week, this is what kind of makes this week so exciting, is that we have the Fed meeting, and then this, and whatever happens here at these, usually these December Fed meetings have been very, impactful, and surprisingly have had bigger changes, even the January ones too. So this is going to kind of set us up for a 1-2 punch coming into 2020. So it's very important, but also have the trade war stuff coming out on Friday. So that's going to go hand in hand with all that. But the key from all this, again, making this digestible, is that coming into Wednesday, you just need to be looking at some of these factors like interest on excess reserves, see if they do anything with the bond buying and the treasury program and the bond rollover program and how they plan to reinvest that, stuff related to the balance sheet, and then, of course, the overall stance they're going to be taking towards rates in the dot plot. But don't be surprised when you don't see an action from the Fed and be like, oh, well, what's happening? Why is it moving? Going to be the intricacies within this report and the tone that it takes leading into next year, which will be important. So watch out for that. That's the main thing I'm watching from here, and I think this is going to have a big effect on bonds in that same time frame. So that's why I'm excited for this week. We're going to see what happens. And again, you sprinkle a little bit of trade war, it gets a little better. But for the rest of the keys, again, Fed is going to be tomorrow. What we want is going to be on Wednesday. That's when the actual decision comes out. Then you're going to hear from Powell the 30 minutes after the initial report. We're going to get to hear from Powell. He'll have his press conference. We'll get to hear everyone's questions. But all in all, moving towards the Fed and how the market moves. And again, watch out for that melt up, melt down I've been talking about. It's going to be slower moves, and we even broke below, even after hours it started falling, but the fact we broke below 314, that was a key level. Again, that's where we gapped up off of the jobs report and all that stuff Friday. But if you come look back to last Monday where we opened, the minute we fell below 314, that's when things picked up, and we didn't really break out of that trend until that good report after. So that 314 level is going to be important, but watch how the market moves coming into the Fed. But this leads into the next key. The trade war implications seem to be outweighing the Fed. So again, that's where it's like the Fed and how stocks have been moving. It's like they haven't been moving too much in the Fed, like they don't care, but you still see some of that hesitance, even though the market kind of knows what's going to happen this meeting. So there's something looming there, and that's where I think those 2020 implications is going to be key for the Fed. But other than that, watch for even leading up to the Fed or even shortly after the Fed, watch how the trade war comes in. But it seems to me like that type of news is taking a little bit more weighting here, especially as we're getting closer to crunch time. So be careful with the types of moves that you expect, and even on the ones that you play on the options. But that's pretty much it. So let us get into the plays. So I got these 3 potential plays for you. The first one, this will be your bonus one, because this isn't a specific play, but it's kind of the ideology behind going about it. We talked about it yesterday on the watch list. We had that awesome 11 out of 11 today with PMAC, and I was explaining he wanted short-term Bank of America, and I kind of disagreed, and I said really what I'm going to be going for is I like kind of the shorter-term contracts, but on TLT, but we're still playing for the Fed those December 27th, if not longer, on Bank of America. And those, I think we have like 35 calls and 30-50 puts. But actually today now we were up on that play. They've kind of balanced out. We're down 20 bucks on the puts and up $15 on the call. So the calls aren't as expensive, but the puts lost value. But those are the plays I still haven't got. I want to see if we're going to average down or what we're going to do with that tomorrow, if I want to even scale up on that play. I'm still waiting with that initial 100. But like I was saying, if I am going to play more, and what I'm going to be looking for is get more time on the Bank of Americas, and then after the reaction, I might wait till after the Fed, maybe sprinkle some before. I'm going to go for shorter duration TLTs in this case. So that's the first potential play. That's the first thing I like. And again, the main thing I am going to be looking for this week is the plays related to the Fed. So it is going to be those Bank of Americas and the TLTs. And depending on how big of a reaction we get, that's going to start stemming into the other companies. And that's why the other companies we have here, even on the watch list beyond that, that's where those are going to play in. But as direct catalyst, direct event, I'm looking Bank of America and TLT. And even then too, depending on how things move coming into it all, I am kind of starting to lean to play after the event, but I still want to have a little bit on there before it. So far, only have 100 bucks on that Bank of America, 50 bucks both ways. But that's kind of my approach and what I'm going to be looking for at Bank of America and the TLTs. The next one, this was a play I like. This is what we've been talking about here, the HD, and I'm kind of expecting it to look like McDonald's, how McDonald's had that drop and kind of bounced up here. But again, if we sold those puts, we were saying just sell some of the puts on Friday when it was dropping for this same event. Those puts have gone great if you sold them. But now I kind of like this play. It's a HD December 20th Iron Condor. Sell the 217 calls, buy the 220 calls, sell the 212 puts, buy the 210 puts, and you get 155 credit. So this is an interesting play. I would like to get more, and there's another play right there for you guys. Here's the original play right here. So you would sell the 217.50, buy the 220, sell the 212, buy the 210. You get like 158 credit. Pretty much if HD winds up greater than 210.92 and less than 219.08, your maximum profit is 158. Now, if you don't need this platform, this is Tastyworks. We do have the referral if you want to, but if you guys are ever confused with these spreads, it's literally credit minus collateral. So pretty much if you got 158 here, that's what you're collecting. Just subtract that from the 212 and anything there, that's going to leave you with that 209 whatever, or the 210. And then on the upside, sold the 217, collected $1.58. So that'd be 218, add the 50, so 219 something. There you go, 219.08. But that's your break-even point. But this is pretty much saying here, this is why I like this play. There's a few things to take from this. This is one of those lower risk, high reward plays we've talked about, but this one's kind of in the middle because you're getting a $1.58 credit, but your max risk is $100. So you're pretty much risking $100 to make $150. So it's pretty decent. The credit's not too high, but the collateral's not too high either. And this is the key to this play. It's kind of pretty much telling you just by the yield, the credit it's giving, that it's 50-50. It's because there's a pretty good chance. Even I think the probability of profit on this play is 38%, so it's low, but definitely higher than just buying a normal option. It's not as if we're selling one of the 80 or 90% ones, but I kind of like it, especially while Home Depot is moving, so I'm watching that. If Home Depot does break outside of 2017 or 217, I might just even look to sell a one-direction spread rather than doing the Iron Condor, but that's the first play I'm looking at. I really like that one. And again, these are all potential plays too. I haven't played these. These are just stuff I'm looking at. And so you guys could kind of see, I've been saying this a lot because I haven't made a play today. And people ask me, you make a play, you make a play. I'm like, well, I'm looking at these. I'm looking at these. So you guys could kind of see what I'm looking at. The next play I like, I was talking about this. It was Tesla. They started going up. And again, this is kind of related to the Fed here because sometimes during the Fed, there is stocks that are going to kind of just move and do their own thing. So especially sometimes think shitty stock rotation. Tesla might have that. If everyone's selling off stocks because the Fed, Tesla's like, I don't care about the Fed. What do you say? If you like it, I like the video. So that's why I kind of like this play. But this one is about one standard deviation. Again, that HD was for next week too. It's not a weekly. But this one would be a Tesla December 20th. Sell the 352, buy the 355. And this would just be a put credit spread. But you can see here December 20th. So there you go. I'm supposed to flip it around like that. Excuse me. So you're selling the 355, then buying the 352. And then the key to all of this is that you're hoping that you're pretty much saying Tesla's going to go up. So this is like a 190 credit or something. But this is why I like it. You're pretty much risking 50, 60 bucks. And if Tesla goes pretty much right where it's already pricing in, if it goes to 350, kind of up near those highs, and does its own little individual rotation, it hasn't sold off yet, it'll make money. So it's a way to kind of get some bullishness on Tesla without picking an exact spot, but based on the credit, high credit, there's a good chance, you know, by getting such a high credit for it, you could lose. It's going to be a little bit less unlikely, but kind of meets in with the pricing. So I like that play. And then lastly, I would say this one is probably my favorite play out of all of them, a Lulu Iron Condor. It pays 210 credit. And again, the issue with Lulu is going to be getting filled on these. So I'm going to see, I think they report tomorrow or the next day, sometime this week. But this is one I'm going to wait to see kind of again before they report to make the play. The thing that worries me is the spreads, but there's two different versions of the play that you could make. So it would also be selling the weekly instead of the next week. You can do the weekly, but it would be selling the 225. So here's the two versions of this play. The first version is originally kind of how you guys always see us do these to begin with. It's just $2.50 apart. It would be sell a 235 call, buy the 237.5 call. Sell the 225 put, buy the 222.5 put. So this is an Iron Condor. Your credit would be 210. So you're risking 40 bucks to make $200. So 25% odd. So that's pretty good. Like I'm saying, you could get a range. The problem with this play is the spread and getting filled. So I like this range here. And what it's pretty much saying is if Lulu winds up being greater than 222.90 and less than 237, your maximum profit is 210. So that's like about $8 on the downside, $7 on the upside. But then you look at Lululemon. You look at the 230s here for this week, it's pricing about $8 on the put side and $10 on the call side. So we're saying $8, you're pretty much playing within what it's pricing at. So if it underperforms or they're charging way too much and it kind of disappoints, like we've seen with some of these end of the cycle earnings, this could be a good one. And Lulu is a brand name. So some of these brand name earnings, they could usually flop. And what I mean by that is that those doesn't mean they drop or run up, but they're just really overpriced. So I like this play, but now here's the next variation of the play that you could do. You could widen it and make it a $5 credit spread, and it changes things around because this is still high credit collateral, but I kind of like this because you're playing double. So in this case now, you're risking $90 instead of $40, and now you can make $401, but now look at your break even. It says $220.99 and $239. So it gives you $9 on the call side, $10 on the downside. You're risking $100 to make $400. So not too bad. I like that one. I'm probably going to do one of these for earnings. We're going to see, but if anything, you guys get to learn from it. You get to see, but I like that play. But those are your potential plays. So that's pretty much it. Watch those tomorrow. I'm going to keep my eye on those. TLT, Bank of America, HD. Watch Intel. All those companies we talked about last week, I still think they're in play again. Intel and some of the chip makers we looked a little bit weak today too. So watch them. Watch Tesla. Watch our Shopify. We still have these. These hit 380. They're looking very, very good. The volume's up. So again, watch shitty stock rotation, or they kind of confirm and do their own things, but we have that place for 2 weeks. We're still just holding that. Thing's up now like 600%. It's like worth like 180. We paid $30 for it, so we're still holding that. That one is a debit spread, has a max gain of $5, so we'll see. But the contracts are expensive on that, so if you haven't played it, be careful. Watch them. Watch the earnings. Stitch Fix. This one, I mean, it moved 16% here on earnings, so watch them. There's another one for earnings today, Chewy. Some of these smaller ones, depending on the report, they could be pretty decent, and I kind of like them, so keep your eyes out for those two. And then the other companies I want to watch as well, FedEx for earnings. I want to revisit those. Those have their plays, and those have the earnings plays coming out, but they're on the 16th with earnings. But like we're saying, if that Lululemon could be a good play, some of these earnings condors on some of these brand names at this later stage, those could end up being good. So I might even look for a Condor. Remember, I was kind of looking. It met the criteria for both ways, but the contracts were expensive, so we'll see what we can find there. But watch FedEx. I like them. Then watch Target. They're up near all-time highs. I'm even considering adding Target to the long-term portfolio. Another one I might even want to add is Costco, and Costco has earnings, and then we even talked about a special dividend. They might offer that here, but I even started pulling Costco up on the yearly. It looks a little bit weak, and they had a bad December last quarter, so I don't know. I think we'll see how that special dividend talk comes into play, if that would boost it up. But Costco's a little interesting. However, I do like Target, and I like Target a lot. The problem is it's had trouble breaking out of this 127 from last time, but overall they're holding up. They've seemed pretty stable and good, so I like them. And like I'm saying, I'm even considering for the long term. Watch them. Watch Netflix. They dropped after hours on reports that people thought like Bill Ackman took a stake in them, but apparently it was a different company or something like that. So watch out for them. They dropped after hours. There's Chewy. Then watch Ulta. They dropped today. They dropped $10. A pretty decent amount, but don't forget they had all that earnings. They were at an interesting spot. They may become a little bit more difficult to play when it starts doing this stuff, but I'm still going to keep my eye out for Ulta. I think it could be good. And then watch Snapchat. They had a good run these last few weeks, and they're coming back down. I want to add more to the long term, so it's starting to get near my entry price, especially if they keep selling off in these weird quantities. So just keep your eye out for that. We're going to be watching that. Then finally, watch JP Morgan. That's a secondary of those banks. I still like them. Watch UNH especially. I still think this is in play. This could be that weekly YOLO. Who knows? But I really like where they're at. I've talked about it a few times, just valuation-wise. So don't forget about them. Don't forget about Microsoft. Some people even ask about what their premiums are doing. But Microsoft, it's low-key been a sleeper, one of the market cap leaders, but it's just hanging out near highs. So it's kind of like a baby Apple without all the hype in IV, and it doesn't look as aggressive as Apple. So watch out for Microsoft. Depending on what happens, that could be a good play. XL and X2. Ren, this is what I was saying along the lines with like Intel and some of those plays from last week. I still like the plays. The key is just going to be timing and when they break, and it sucks. We kind of got to wait for the news, but watch them. Then watch Walmart, the value stocks in general, and I was even thinking adding them to the long term as well too, but that is pretty much it. That's your watch list. We'll see what happens. Get ready for the Fed, baby. Make sure you're hydrated, healthy, ready to go. I'm going to see you in the morning. I'm going to see you on Wednesday. You better be there. If you're not going to be there, you better get your stream alerts. You better keep up with the watch list. Do something. But watch out for what happens there. Hopefully you're paying attention. I mean, this could be a good time to start getting a refresher with some of the macroeconomics, the bonds, and what's happening. Get ready for 2020, man. The code loves you. I need you to come with energy. Stay hype, positive, respectful. You know what to do, baby. Let's go!